A lot of times when I'm talking to people and through my education, I speak a lot about that there are other people who are speculating and gambling with your money when it comes to your investments. So today I'm going to share with you an example of this to illustrate that point a little bit more. And so what I was doing was recently I subscribed to a industry publication called The Investment News, and I was reading recently, and in here there's an article about one of Fidelity Fund's most successful or largest mutual funds. And in here it talks about him, and to start I want to share with you the picture being used, and you have the manager here in the middle looking all serious, and around him are his other people not looking as happy, and they're at a poker table, and what he's doing, he's putting all his chips into the middle of the table. Okay, so to go through this a little bit more, what I want to start with is I'm going to read you, it talks about how this manager has been successful in avoiding some of the blow-ups of some other star mutual fund managers. And what I find interesting about that is hopefully none of you out there are invested in some of these other star funds that have had these major blow-ups. Okay? Keep in mind that can happen to almost any of these funds that are involved in active management, in addition to other types of investments. Now, to go further, now I'm going to quote this manager, and what it talks about, what he says in here is that really good stories are hard to find. So when you find them, you've got to bet big, Mr. Danoff said in an interview. It's like a poker game. When you think you have a winning hand, you've got to bet big. Now, this is the mindset, but is this the mindset that you think that you are getting when you invest in these actively managed mutual funds? Now, keep in mind, this is not rare to just this one person. This is basically what they're doing and what the mindset of these managers and these star managers is. To illustrate what this means a little bit more, when I talk about the speculating and the gambling, inside of this fund, as of June 30th, 2013, this fund held 329 individual stocks. Of those, it had a portfolio turnover of 42%. What that means is that every 12 months that he loved those 329 stocks so much that every 12 months he's selling 42% of it. He's turning over those stocks in those portfolios almost half the time every 12 months, buying and selling, buying and selling. That is speculating, that is gambling. So what you need to do is you need to fire the managers. That activity is dysfunctional and it does not add value. You need to fire the managers, and it's simple to do. To keep it basic, look at something called index funds. Index funds are available. For the do-it-yourselfers out there, you know how to find an index fund. Now there are other types of investments similar to an index fund that do the same thing. For the people who aren't do-it-yourselfers, well, inside of your 401k, most of them will have one or two index funds. If they do not have an index fund, you need to demand it. Go to your HR department and tell them within your 401k you want an alternative choice to the active managers, and most commonly is an index, and have them offer indexes throughout the different categories. For outside of your 401k, if you're not a do-it-yourselfer, again, you need to find somebody who is not going to take your money and give it to these places in which other people are going to speculate and gamble with your money. There are alternative solutions than that. Okay? So the bottom line is this. When you're giving your money to these active managers, you are giving your money to them to speculate and gamble. It's dysfunctional behavior, and it does not need to occur inside of your portfolios. Because when you do, this is what you're getting.